Our November read on housing starts and permits. Housing starts come in at 1,427,000 seasonally adjusted annualized units, a bit better than expected. But what's interesting here is last month, originally released at 1,425,000, gets upgraded a bit, which makes this number the lightest month-over-month housing starts change since August of 2020. And if we look at the permit side, 1,342,000, this is a huge miss. We were expecting a number around 1,480,000. Last month was revised subtly to 1,512,000, which makes this number on permits the lightest number since June of 2020. Now, we all know that interest rates peaked on the 30-year mortgage around 7.35, and that was in November. And our most recent read from Bankrate puts that average 30-year fixed across the nation a little bit under 6.5%, which means it's at a 3-month low. So maybe there's some help over the horizon, but we all know single family has been suffering to multifamily, and all the issues that are headwinds to the economy are affecting housing in a big way, even with that drop in interest rates. And I'm sure that Diana Olick will give us more color on the breakdown between single family and multi-dwelling. We see interest rates, well, 365, 366 on a 10. Should we close here, that would be a 3-week high. Interest rates were pushed higher because Kuroda at the Bank of Japan decided on a surprise basis that maybe yield curve control is going to end, and he allowed their 10-year to move towards 0.5% versus its cap at 0.25. Becky, back to you.
Rick, is that a huge seismic move, in your opinion? Is this something that people should read much more to the nth degree?
Oh, yes, it's going to be a great learning experience. Now, Mr. Kuroda might say that he's not really altering things that much, but this could be the beginning of significant change. And the reason I think it could be a great learning lesson is because we have no idea how this is going to turn out. Nobody, no country, no economy, no central bank has ever done what the Japanese have done to basically put the foot on interest rates and control them, even to the point where it makes the U.S. look paltry by comparison, and their ownership, the Bank of Japan's ownership and things like ETFs, equity ETFs. This is going to be a lesson to see how the global economy treats their currency and their interest rate complex as they try to unwind most likely the biggest restraint and stimulus program in history.
Rick, thank you. For more on all of this, including the data, we want to bring in Diana Olick and Steve Leisman. And Diana, we'll go to you first. You want to break down these numbers a little deeper? Tell us some of the details?
Yeah, absolutely. And like Rick said, I'm going to break it down between single family and multifamily, because when you look at the permits, the building permits, which are an indicator of future construction, and that's what I want to focus on, the big drop was in multifamily, down nearly 18% month to month. Single family still down, but only about 7%. So that says something about what the builders are seeing in the rents coming down and potentially getting a little nervous about that. But also when you're talking about the building permits for single family, as Rick noted, mortgage rates actually peaked at the end of October and are down a full percentage point since then. So November, you were seeing mortgage rates come down pretty sharply. I would have thought you might have seen less of a drop in building permits. Perhaps the builders feeling a little better. We heard from various CEOs that they were seeing, quote, green shoots. Those were CEOs of home builders. And so I'm concerned a little bit here that you are seeing this continued drop in the building permits on single family. Now, going forward, the builders did say that their builder sentiment dropped yesterday, but only by 1 point. And they did say that their future expectations for sales were a bit brighter. So again, it's not a great number on the starts numbers or on the building permits, but going forward, we could start to see that single family start to at least maybe stabilize, stop dropping so much. I think it's going to be interesting to watch the multifamily from here on as we start to see those rents really ease and in some markets really come down. Will the multifamily construction sector start to pull back just as single family did about 6-8 months ago? Becky?
Hey, Steve. Thanks, Diana. Steve, what are you thinking?
I'm wondering the extent to which all this is a problem for the Fed. I don't think they want to see the housing market doing this well. People talk about the housing market being in recession, but at 1.425 million units, you're still above you're right around where you were before the pandemic. and you're still above, many of the years before the pandemic. So when interest rates, by the way, were lower than they are right now. So you see this kind of restraint, or this kind of these numbers out there, and you're not seeing the restraint on the economy. And then you have Diana talking about better days ahead. I don't think Powell hears that and he gets happy about it. I think it might explain some of the hawkishness of the Fed at the recent meeting, is that they're concerned that you have this really essentially stimulus coming back to the economy. You were at 7% mortgage rates. I'm not saying that's the right level, but now you're talking about some rates, Diana can correct me if I'm wrong, in the 4.5 range, and you may not get the declines that you're hoping for or looking for in the housing numbers and the housing pricing numbers feeding into the inflation numbers. So I think that's an area of concern.
Science.